Warren Buffett's incredible investing success has grown his company Berkshire Hathaway into a true financial giant, having recently surpassed $1 trillion in total assets. This remarkable achievement reflects the power of disciplined long-term investing and smart capital allocation. To put into perspective just how massive Berkshire has become, its $1 trillion asset base is now larger than the combined assets of Microsoft, Alphabet, and Meta. That is a staggering feat for a non-tech conglomerate, with Berkshire's assets roughly triple the size of Apple's and over twice as large as Amazon's. The majority of Berkshire's assets are financial, comprising its enormous $353 billion equity portfolio and $147 billion cash position. This provides tremendous financial flexibility to capitalize on new opportunities. The rest of Berkshire's assets come from its diverse operating companies in sectors ranging from insurance and energy to manufacturing and retails. Berkshire's focus on these old economy businesses, rather than high-flying tech companies, is characteristic of Buffett's measured approach. While unusual, it has clearly been an enormously effective strategy for building an asset base that even outpaces younger tech giants. The only companies with more assets are massive financial institutions like JP Morgan with $3.9 trillion. To put Buffett's success into perspective, Berkshire had just $30 million in assets when he took control in 1965. In the next 30 years, he grew that by 700 times to $21 billion, an incredible return. But what's happened since 1994 is even more mind-blowing. A further 50 times increase to today's $1 trillion figure. This means that over Buffett's tenure, Berkshire's assets have ballooned by a staggering 33,000 times. Maintaining such impeccable discipline and vision over decades is almost unheard in business. Buffett's unwavering investing principles, buying great companies at fair prices and holding them forever, has compounded his capital astronomically. Buffett's unwavering patience, discipline, and long investment horizon have powered this asset growth through the magic of compounding returns over time. His success follows the simple yet powerful formula of buying great companies at sensible prices and holding them for the very long run. Reaching $1 trillion in assets seemed unimaginable when Buffett first took back in the 1960s. But by sticking to his principles year after year, reinvesting profits wisely and rarely selling assets, the gains have compounded extremely. This case study reinforces that sound investing fundamentals never go out of style. If you enjoyed this video on Warren Buffett, be sure to subscribe to the channel. There is a ton of educational content coming focused on successful long-term investing strategies and insights of Warren Buffett.